I'm gonna focus on giving you some extra attention because, that's what I do. I reward the attention-seeking folks. All right.
Yes.
So let's look at some pairs, shall we? Adam, you say you were trading EU?
Yeah.
All right. So let's go over this again. Again and again. All right. All right. All right. The month is closing out. So what do we have here? Okay, I see some healthy price action here. And what I mean by healthy price action, if we look at these last three candles, we have a wick coming down here. Then we have this long red candle. Now we have a wick going back up, closing that fair value gap. Healthy price action. And looks like the euro still has a ways down, I would say, to travel. Huh? Looks like that M, I would say the euro is going to fall. Continue to drop. I hope you see the same thing there, Adam, since you're trading this trash.
Oh my God.
All right. So, not really sure why anyone would trade anything besides the New Zealand dollar at this point, because you got the drop. Hey, to each their own, each their own, each their own. Maybe another couple 100 pip drop here before test this area. So at this point, Adam, I would identify where this price can go. And what I mean by that is you identify the points of interest that you think you should see a reaction. And I would start with that 100 pip move down here to the top of this wick. As you can see, there is not healthy price action right here. There's an imbalance. So price needs to fill that imbalance, and what better time than now? This would be in my first area of emphasis or area of interest. There's another small imbalance here. So I would also mark that. And there are order blocks in here, okay?
Yeah.
So just looking with my naked eye without dropping down any time frame, I'm going to mark this weekly order block, okay? Obviously, if we want to drop down time frames, we can get a very narrowed down version and probably a smaller area of interest here. So I know this order block is going to be key because it sponsored this huge blast that broke all kinds of structure on the way up, right? So I know without a doubt this area is going to be key. Now, when I say key, we'll probably get some sort of a bounce. I'm looking for it to respect this area, okay? Maybe it bounces a couple of times and breaks through. Maybe it bounces one time and goes through. But the point is, this is a key area, okay? So it looks like if it doesn't turn around at this first, 110 pips away, the next opportunity for it to turn would be 187 pips. And then on down to 313 pips. So I definitely think we'll see price move all the way down to this to this area. I don't know of a time frame, but this is definitely where I would be looking to trade this. Looks like it retraced a little bit. Let me see what kind of retracement we got. Since I haven't really been following this trash. Okay, if you notice, this is a pretty shallow retracement. I really would expect this to kind of retrace up and at least hit this 50% before it pushes down. Honestly, I don't know that that'll happen. You know, I really haven't been watching this, but let's look at the dollar, the Dixie. Maybe we'll get a better answer from this. Okay, yep. I think we'll see it. So the dollar moved from here weeks ago all the way over here. It retraced about 50% and went up. So if the dollar keeps pushing up, that euro will keep pushing down. But if the dollar retraces, like let's say we get a double top here and it pushes down, then you'll see the euro push up to where it needs to push. So maybe we'll get a M with this dollar index and it'll come down to the 78% line, maybe. So I would watch for that. You know, this would kind of be I would kind of trade it based off of what happens with the dollar too. So, you know, if you're trading any USD pair, the dollar index rules. So we have FTMO, we have non-NFP week.
Oh yeah.
So be cognizant of that and what they're doing. Now, if they raise the interest rates like they say they're going to raise, this thing is just going to keep going up. But if not, I don't think our economic numbers were super powerful. So if we keep getting, like if we get crappy NFP news, this will probably push down. So I would just be kind of cautious with it, right? I mean,
Yeah.
you see, we just got a big ass W to finish off. Just be cautious. I don't know why anybody would trade this trash, but hey, you know, that's you. It's all great. What are you trading there, Essence?
Let me check. I'm trading Euro NZD. I'm up in that one right now. And I'm also trading.
So what do you expect Euro NZD to do?
What do I have? I think for a buy. No, a sell. I put it in for a buy. I think it's gonna sell.
You put in for a buy, but you think it's gonna sell?
No, I had put it in for a buy at first. I put it in the wrong direction. And now I put it in for a sell and it finally went in my direction because it had retraced for a minute.
Yeah, I can see why you would put in for a buy. Not, but hey.
No, I know. I put it for a sell. I'm set. Well, I did start off as a buy. I did because I was listening to you when you was like the interest rates. And so when I had put it in, I didn't realize I was supposed to put it. I just put it in the wrong direction.
There you go. Thank you for owning your shit. Thanks. All right. So at some point, you're going to want to see this thing retrace.
Okay.
We'll measure this first retracing. Okay, this retracement went past the 50%, which is good. It went to about the 61%. Then it shot all the way down, here. Maybe it keeps going, you know. I'm expecting a retracement in the JPY pairs, the Euro JPY. I mean, the NZD JPY. But maybe this is just going to keep going. I'm not really trading this right now, so
You said that
still makes me nervous, like it needs to retrace.
NZD-JPY, you said it's retracing.
Yeah, it's going to retrace.
What do you have for a buy or sell?
Well, if it's retracing. See, yeah, this thing I think is just going to keep selling. Now let's go to NZD-JPY there, homegirl.
Yeah.
All righty, that pushed right into my order block here. You see that? The monthly order block. And it looks like it rejected from my monthly order block, which tells me that I am the shits, the dookie. So I can expect for this. It ain't gonna push down 500 pips. Let's say it's gonna push down. I would love to see it push down 385 pips. Even 265. I'll make $50,000 if we push down that far. All right, so on the monthly, we got that strong candle action. You see it? Let me show you some basic dookie. All right. You see that? That's 311 pips. I expect this to retrace somewhere here. You see, because see the wick on this candle? Healthy price action means that this retracement will come back down to that wick before it goes up. You follow me?
Yes.
All right. But just because I think that doesn't really mean anything. So let's take a gander here. Ooh, look at that shooting star. See that shooting star?
Yeah.
That tells me that your boy is cooking with Crisco. Let me pull out my fib here. I know what you're thinking right now, Essence. All right. When I pull the fib out, I want price to at least go 50%, right? And ideally, 78%. So if you can see that there's another area, see that wick right here above this little candle I got my
Yeah.
So price can ideally come right there. And that'll be beautiful, according to Mr. Inner Circle Trader. 78% is a perfect retracement. You hop into it and roll up. But you have to understand that banks will enter these trades anytime after the 50%, right? So they could decide that, hey, the area that I marked on that monthly candle is good, and we can push up and they'll come get this some other time, right? So my plan is just to hop in right now, you know, once the market opens and I start seeing it sell. You know, of course, I'll drop down and find me an area of interest where I can get me a super tight stop loss, and I can have some ridiculous lot size that I can take for 200 pips.
That'd be nice.
Yeah, I mean, that's how it's gonna work for me. I can't speak for y'all, but that's what I'm gonna do. But even if you use this weekly candle, it's only a 68 pip stop loss, right?
Mm-hmm.
I mean, that's not bad on a weekly candle, and you're gonna get, you know, at least 300 pips from it. You can still eat, but you know, if you want to do the work and drop down a couple of time frames, we can pick you an area of interest. You'll be a lot better off. So how do I know that this is going to retrace? How do I know that it's going to retrace Essence?
I don't know, could you use the fib and hit the percentage?
You got a better answer than that there, Adam? Because that answer is not what I'm looking for.
Isn't that like an order block right there or an imbalance?
This right here?
Well, I was looking lower, but where, because I
Where?
can't
Right
see the
here?
other side of the chart. Yeah.
Well, there is an order block down here, yeah. Price bounced off that order block, came up here, bounced off this order block, and now it's going down. My question to you, and I know Naya doesn't know because she's been a distant stranger, just like you, Adam, y'all been distant. You know, I'm very disappointed in you. But listen, how will you know? Okay, let me give y'all some big time. Let me give y'all some Kobe Bryant diamonds. Okay. Now you can drop some gems in the chat since that's what you used to do when you're on the power conference calls. But let me give y'all for real the trick, right? This is all I did. And because this is what I'm trading, right? You can do this for your pair too, Adam. So I told y'all how to use bar chart, right? Do you remember, Adam? You might not have looked at the video. Do you remember Essence?
We can go over it again.
Oh, okay. I'm glad I can go over it again for you. All right, so let me get the video fired up. If you go on your YouTube and you type in ICT Market Maker Series, all right, click on that first video, volume 1. Hopefully y'all write this crap down. You can use this for the rest of your life. You don't need some Forex guru or some fake expert to
gloss over too much
to tell you anything. This is all that I did. All right, you go through here. He's going to tell you in the first 20 minutes of this video how to use barchart.com and global-rates.com. Okay, he's going to tell you that.
banks
And he's going to tell you
to be experiencing in terms of
that those interest rates are the fundamental drivers of the market. So what does that mean? That means that the market moves based off of the interest rate of the currency you're trading. So all we have to do, and this is all I did, we know on October 6th, the interest rate for the NZD went up, right? I put this is the COT, the commitment of traders overlay. This commitment of traders, this is the bank's positions, okay? That's all this is showing me is how much the bank has invested in this currency. So if I look at October 6th, right here, they raised the interest rate, the banks raised their positions. It went up 500 pips, right? Guess what happened this past Friday? The bank sold their position. So guess what's going to happen? I'm selling that shit too, right? I'm not guessing. I'm not guessing. This is the way it is. This is what they did October 26th. This is what they did. Sell. This changed Friday. So what I expect to see on these charts is a bomb, right? Because when the banks sell their positions, somebody is going to buy them, but they're not going to buy the same volume. If the banks sell $5 trillion worth of NZD, that stuff is going to fall. And guess what? I'm going to fall with it. Now, you will see at some point, you know, if you look at this daily, at least weekly, hopefully, you'll see at some point, they're going to buy these positions back, but they're not going to buy it back until it's at least at the discounted level. If you guys don't understand what a discounted level is, go watch a YouTube video. A discounted level, you know, is just like you buying your purses, your clothes off the clearance rack. The bank is not going in there and buying Louis Vuitton, all right? They're going to wait until they can buy it for cheaper, right? They bought it way down here. They took profit up here. It's going to fall. They know it's going to go up 900, 1,200 pips. They're going to buy it back once it passes this 50% level. Then they'll buy it back up. Price will turn around and it'll go up another 300, 400, 500 pips. Then they, guess what? They're going to take profit again. And then it's going to fall. That's how all of these markets work. And instead of us waiting and reacting to these candles, we go here and we see, hey man, no, the bank just dumped their shit. Let me hop in here for a sale. So that's what I'm doing. And that's why I asked y'all, you know, what y'all doing? And it sounds like y'all are waiting to see what those candles are doing and y'all gonna react to them. It's nothing like you can make money like that, but there is an easier way to do it. Use barchart.com, you know, look at that video. He'll explain to you how to put all this information on here, right? The first place you need to go is here to pick out which currency you're going to trade. I always sort mine by the change date because I want to know the most recent thing, right? Like I want to know the day that they up the interest rate. They've been saying for months that we're going to raise the interest rates in the US. I can't wait. When they raise that interest rate, you got to go and find which country, like our interest rate is 25%. Let's say they raised it 10% and it'd be 35%. If they raise ours 10%, our interest rate is higher than this Canadian interest rate, which means the dollar USD CAD should go up because the dollar against Canadian should go up because the interest rate is higher. This is what drives the market. That's why this the British pound is going down against the US because our interest rate is higher. So if they raise it, we should see a rise against the British pound. We should see a rise against the Canadian dollar. We should see a rise against the Swiss franc. We should see a rise against the Japanese yen, a rise against the euro, right? This is what we're looking for because these are guaranteed, like big joker guaranteed. Now, on the flip side of that, whenever they do raise the interest rate, because they're supposed to do this, you know, me and my dad were talking yesterday, and they say that it should happen, you know, maybe next week or this coming up week. If they do that, you immediately sell the US 30, all right? Because everybody gonna take their money out of US 30, but you buy the dollar and you buy it against one of these currencies. You can never go wrong buying it against the yen or buying it against the Swiss franc. The other currencies are more tricky. You just got to make sure our interest rate is higher than theirs. Because if they raise the dollar, it might gain a little bit on the New Zealand dollar, but the New Zealand dollar's interest rate is 50%. They would have to raise ours 25% to match that. And then you're still not going to get as much movement against the US USD NZD or NZD USD. You're not going to get as much movement on that pair than you would against USD JPY or USD SHIB. Y'all tracking? Okay, so that's why I'm trading NZD JPY, because I already know what time it is. Honestly, I mean, this may happen. This may happen that Euro NZD might go up too because they sold their NZD position. Okay. Go with the layups, guys. Like, don't make trading harder. Trading is hard, right? Because you have to be disciplined. But if you have an easy trade, or you have access to information to make your trading easier, always go with the information. You don't have to listen to nothing that I say. Listen to what this chart is telling you. You know, if the banks dump their positions, dump yours. I mean, we want to see a healthy fall. I mean, I want to see it fall like 300 pips, to tell you the truth. Because my lot size is going to be like deaf and dumb. I'm going to have some dumb lot size. Because, you know, when it starts falling, it's going to fall. The same way it rose, it's going to fall. What else you clowns got? If y'all don't know about order blocks and imbalances, even if you do, if you do know about order blocks and imbalances, man, keep going to YouTube and keep watching those videos, because there's some very good traders out there putting out some very good info. Let me show you something. Let me show you something. This came out a day ago. Y'all watched it yet? Bruh.
No.
Bruh. It's a 10-minute video.
Hello, everyone. Drop a one if you guys can see my screen. Okay, awesome. So today's call is about take profits. So take profits are pretty easy, if I'm allowed to use that word, but we'll go over from the basics. Chef JPY. So when you're doing your risk to reward, which one should you do first and why? Your stop loss or your take profit? In the chat box, When you're doing your risk to reward, should you do your stop loss first or your take profit? And why? Everyone's saying in the chat box to protect capital. So you can see the R2R. So the reason why we do our stop loss first is for risk to reward, because yeah, to determine our risk to reward. So have you guys ever been in a free group chat or on Instagram and seen traders, you know, let's say, let's do it like this. Like, hey, bro. First of all, let's deal with the 30 pip stop loss, because they usually do with that. And they do it on like the 4 hour or something. So they have their 30 pip stop loss, you know, nice and thick. And then they go like this. Gosh. Like, hey, bro, I trade 1 to 13s only. Join my free group chat, da 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 da. But then their trades, if they even do hit, they only hit a quarter, right? And then you have your 30 pip stop loss, then your 30 pip take profit, and then they tell you close partials at like 15 pips. And they're like, oh my God, these signals are so amazing, right? That's what a lot of people do. Okay, anytime, you know, copying signals or anything like that, you'll get probably normally like normal people trade is like a 1 to 5, I think. right? And then they tell you collect partials that are 1 to 2, 1 to 3, right? And your stop loss is 30 pips. So we obviously don't do that. We have a 10 pip or less stop loss, which means our maximum amount of pips we're gonna take is 100 pips, okay? I put in, I think on a YouTube video, I was saying, oh, like 100 pip take profits. I put it somewhere, and then someone was like, oh, it's traders like you that are effing scam, and cussed me out. I just started laughing. I was like, oh my God. Like being on the internet is so crazy. But generally, if you have a 10 pip stop loss, your maximum risk to reward is 100 pips, right? Because that's going to bring you a 1 to 10. So 10 pip, 100 pips max. Okay, so that's our maximum. Now our minimum is technically 3 pip stop loss. So then our minimum take profit generally should be around 30 pips as well. Okay, so you guys can write that down because you guys didn't know. Some people don't know we have a minimum stop loss. Minimum stop loss is 3, the max is 10.9. Okay, so this is so that when we're in a trade, right? Let's say we have our 10 pip. Exiting the trade is probably more important than your stop loss, because your stop loss cannot get hit, but you still don't make money. You don't make money until you hit take profit. And that's where people like feel like they kind of neglect the take profit. Or they go, oh my God, my stop loss. No, you don't make money until it actually hits take profit. And if you're sitting there collecting partials, which we're going to talk about that later today because you're doing a trading plan. But if you're collecting partials, you know, at a 1 to 2, 1 to 3, and 1, you're not getting a risk to reward. But like generally speaking, you're also sitting there watching the trade. Like drop a 1 in the chat if like you're part of an academy where they're like collect partials here, collect partials at this number. Like you set a trade and they give you like 5 places to collect partials, and you're at work, you're at school, you're in a grocery store. You know, I was working when I first started trading. So, you know, I remember like watching and trying to set my alerts to collect partials on my phone. And it's just like, God, I'm getting anxiety, honestly, just thinking about it. How you just have to be on your phone all the time. Like now I trade like, you know, an hour or 2 a day. I set my limits and I go to bed. For me personally, 90% of my trades, let's see if we should say 90. I want to say like a good 70. Maybe I should start writing down the times. But 70% of my trades happen when I'm sleeping, and at least 90% not on the computer. So we're talking about, you know, like I don't really go on my computer after 9. So like from 9 to 9, that 12 hours is usually when my trades activate. So it's either, you know, London or it's like early New York, right? 9:30. So for me, I don't even, half the time partials not even an option for me, right? So I set my TP, my MT4 as is, and I'll set an alert for my TP when to collect partials. I'll get into that in a second. So let me just go to my real example. Because this was, I didn't even know that this reversed until now. Because I just thought I hit take profit. I didn't read my alert. So this is Chef JPY. Okay, and this is the perfect example of why we have to have a take profits at bodies at our nearest equal low. So a lot of people are kind of getting this confused. So if this is our entry, right? This is our entry. Our risk to reward should be the structure that brought us in to the entry. So when price goes up, 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 enter, whatever low is here should be where take profit is, preferably at the body. Okay, now I'm gonna say this because I'm pretty sure it's in the videos, but I'm gonna say it. Our minimum is 8.5 risk to reward. Our minimum is 8.5. Some people say, well, I don't get a 1 to 10. You guys, you have 1 to 10, sorry, you have 8.5 to 10.9. To me, that's a big gap, right? That risk reward is like the difference between here and all the way up here. Like that's enough space to really get your take profit. All you have to do is do this equal lows back here. Now, a lot of times people are doing equal lows all the way from over here. Okay, your take profit shouldn't have to pass through all the way to over here. I'll show you examples where sometimes it does, like if you're in a reaccumulation or redistribution, but generally speaking, it doesn't need to come from all the way back here. It should all be in one area, you guys. So if you look at the chart gallery, and this is why, you know, some people get better results with the SMA than other people. It just is what it is, right? Because some people actually look at the information and then they actually use it. So let's just do imbalance. So this is one where it's kind of like a reaccumulation where it's going to be over there. But let's look at one like this one. This is your general basic imbalance flow, right? So especially here, right? So the entry is here. So my first area out is here, which obviously isn't giving me risk to reward. So then I'm gonna go here, right? I'm gonna go here. So what most people mess up, they take it and they go over here. You don't want to cross through candles. Write that down. You shouldn't have to cross through candles 90% of the time to get a take profit. So if that means you're going with the 8.5 instead of a 10, just do it. Guys, these rules, the way things work out, like I didn't make this stuff up, right? So sometimes I think people are like, I don't want to say the word test my opinion, but they want to try their own thing. And it's just like, no, there's black and white when it comes to this, okay? So as we see here, that's my take profit. And when it got smashed, I didn't even see this until like 20 minutes ago when I came on the computer, but it turned around, right? So take profit smash, right? Take profit smash. Now, the reason why we don't use bodies is because bodies are stronger than wicks. Bodies are stronger than wicks. So price is going to be more attracted to the body than where the wick is. And the wick is like, it's, what's the word for it? The wick is not guaranteed. That's what I usually say. The wick is not guaranteed, but the body is. So notice how price just slipped on the area of the body, right? So if you would have had your take profit here and price reverse, you wouldn't have hit take profit, right? So take profit gets hit and then price turns around. Okay, so getting out the trade is important, right? So that's why we're not doing these things saying, oh, I trade 1 to 13. I'm going to trade 1 to 12. Listen, you guys can trade 1 to 12s, 1 to 11s, 1 to 13, but based off how people are trading Wyckoff, 1 to 10s is more than enough. Okay, I didn't choose 10 because it's my favorite number. I choose 1 to 10 because it works. Okay, when we're trading smart money concepts, generally speaking, this one's a 50 pip, but we can get 50 to 100 pips easy in the right place, right time, risk reward. Very, very easy. Anyone have any questions so far?
Short and sweet. The more you watch those videos, the more you will understand how to choose your order blocks and set up your trades, man. This girl's class is relatively cheap, something like, I don't know, $30 a month, which isn't bad if she can teach you how to, how to find your trades or whatnot. Y'all know I paid for my course through Lavish Ruby. It didn't get me to the level I am now, but it gave me a basic understanding, of trading. If you have to invest in yourself, invest in yourself. All right. If you can't get the information from me that will make you successful, get it, pay for it, get it from somebody who can make you successful. But the most important thing is, man, if you open your YouTube and you type in what you're looking for, you'll get 1,000 videos. Somebody will be able to explain it to you where you can understand it. I don't want to rant, I've covered everything that I wanted to cover today. Y'all know I'm trading NJ, next week. So if you ask me about anything else, my answer is gonna be, why would you trade anything besides NJ? but hey, I mean, for real, I would look at it and I'll give you my opinion on it, but I've actually went and saw what the banks are doing with the New Zealand dollar. So for me, I don't really need to waste my time looking at anything else when I can just make all the money during NJ. Okay. I know some people don't trade this week. So, if you're taking this week off, that's cool too. Hopefully you'll still try to trade your demo. But this is the future. Hopefully you guys believe that. I know that. So I'm gonna go ahead and blow this account up, while y'all keep doing what y'all doing. If y'all need me, hit me up. I'll be in the chat. And y'all have a great weekend.
Thank you. You have a great weekend.
You're welcome.
Mike.